I'm almost afraid to ask, Craig, what do you see?
Well, it's not a very constructive setup on the triple Q chart that we brought in here today. We've been in a downward trending channel now for the better part of the year. You're below a declining 50, 200-day moving average. And when you look at that chart, we just can't seem to reverse the downtrend. We've seen the Dow, which is my mother's favorite index, has already reversed the downtrend. And at this point in time, it looks like we're setting ourselves up to come back and perhaps retest 259. But I got to tell you, even with the Dow, even with the triple Q's weak, that doesn't mean the rest of the market can't work.
But how often do we really see that big of a difference between the NASDAQ, say, and the other, the Dow and the S&P?
Well, if we just kind of remember what happened post the dot-com bubble in the 2000 period of time, there was a long period, over 2 years, where people were talking about the market X, the technology sector. And I suspect that we're probably entering a phase like that again. This is going to be sort of X, the FANG stocks. Because if you look at Amazon, you look at Netflix, you look at even Tesla, if you want to add that into a FANG, plus type scenario, all those charts still continue to be trending lower in here. But when you look at what's worked coming off of those October lows, the Dow was up over 15, 16% coming off the lows. And yet you can see that the NASDAQ was left far behind along with the FANG stocks.
So some individual stocks, looking at Flex, that chart, what do you see?
This is a great defensive play here inside of the technology sector. It's been a big consolidating stock for the better part of a couple years in here. It's finally broken out above that consolidation range, back above its 50, 200-day moving average. These are the kind of stocks inside of tech sector right now, defensive tech names that we think are going to continue to work here for a while, and it's one we'd be buying. I'd also just mention, this is a great play. Nancy at our firm has been talking about the reshoring theme. Clearly, Flex is going to be a play on that.
Do you buy now, though? I mean, there's talk about a Santa Claus rally, and perhaps even though it might not feel like it today, there's been one. We're just hearing about dark clouds perhaps on the horizon for the beginning of 2023. Do you really need to buy even with the charts? If you're looking at Broadcom, something like that, is now the charts telling you now is the time to buy?
I think now is the time to selectively be adding to some of these positions. And I think Flextronics and I think AVGO, Broadcom fit into that category too. You got a very nice downtrend reversal. I think a lot of what you got going on plays into the segment you were just discussing about options and with the expiration happening today. I just remind everybody, you got $4.2 trillion of cash sitting on the sidelines, and you've seen over $90 billion go into money market funds over the last month. There's a lot of investors out there that have been spooked to the sidelines, and any sort of downtrend reversal in the S&P 500 is going to drag some of that money back into the market. And yeah, I do hear the bells, and I do think we're going to have a Santa Claus rally into year end.
Okay, we'll see how high those reindeer can fly. Craig Johnson, thank you.